Hello, folks. This is Rudy Blanchard from Regatta Research and Money Management with our February 2016 Educational Economic Update. Now, in this video, we'll talk about some of the economic headlines that influenced the markets last month and give you some insight as to what that might mean for you as an investor. Now, please stay tuned at the end for a required disclosure statement. January was another volatile month for stocks. Investor sentiment turned negative on some bad news out of China as well as plummeting oil prices. Let's talk about some of the month's events that led to this. A first look at fourth quarter economic growth showed that the economy hit a soft patch in the final months of 2015. Gross domestic product grew just 0.7%, which is a disappointing drop from the 2.0% increase we saw in third quarter 2015. Fourth quarter gross domestic product will be revised a couple more times as data comes in, and it's possible that the final result will be a little bit more optimistic. However, we're not expecting a ton of improvement on gross domestic product in 2016. So why did the economy slow down? Well, we can attribute a lot of the drop to lower business spending and weak global demand. However, the data also shows that United States consumers aren't spending the extra money they're saving at the gasoline pump. Now, does the slowdown mean that the United States is headed for a recession? Probably not. It's not great news, but the economy went into negative territory back in the first quarter of 2014, for example, and then bounced back sharply. Now, as of this update, the S&P 500 for the market, or the proxy for the market, through February 12th is down minus 8.77%. However, history shows that these drops are typical. In fact, the S&P 500 has experienced average intra-year dips of minus 14.2% since 1980. Now, despite those declines, annual returns were still positive in 27 of those 36 years. So what does that tell us? Even when we see retracements of this sort, it's not a big deal. Don't panic. In other news, the Federal Reserve met in the last week of January and decided not to raise rates. That's not a big surprise given the challenging economic and market conditions, but some experts don't think the Fed made the right call. With so much uncertainty in the markets, a rate hike could have given investors more confidence in the economy, for example. On the other hand, inflation remains low and the economic growth is modest, so the Fed will probably hold off on any further rate increases for months to come. Earnings season kicked off in January, and the overall picture is one of lower earnings and lower revenues. It's not a big surprise because we know that American firms are facing major challenges from slowing global growth, a strong U.S. dollar, and weak commodity prices. But more than two-thirds of the firms that have reported so far have been able to beat their earnings estimates, which tells us that managers of these companies are doing a good job of managing expectations. Now, on the positive side, a gauge of manufacturing activity blew away expectations and came in at the highest rate since January 2015. Manufacturing, the backbone of economic activity in many parts of the United States, seemed frozen after several reports showed that factories struggle with demand. So this new data is a refreshing change, and we're hopeful about manufacturing for the rest of 2016. That's it for the February Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at 504-831-4636. We'd be happy to talk to you. Now, here are some upcoming events that we'd like you to know about. Our State of the Market address, February 24th from 7 to 9 at the Sheraton Hotel in Metairie. Also, on March 3rd in Baton Rouge at the L'Auberge Casino, we'll have a State of the Market address as well from 7 to 9. We'll have hors d'oeuvres, wine, plenty to eat and drink. Please come and join us as we'll discuss economic trends and discuss threats to market growth as well as potential opportunities. Now, please remember that nothing we've talked about is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 504-831-4636. We'd be happy to talk to you. Now, while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as financial advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Thank you for joining us. We'll talk to you same time next month. Have a great day.